from just analyzing from the bigger time frame, I can actually see what the market is trying to tell me. Right. So this is what we call uh, British pound against USD. Right. Let's look at another. Let's look at another pair. Let's look at USD JPY. USD JPY is supposed to be selling. Let's look at USD JPY. I'm sorry, USD JPY is supposed to be buying. I meant yes, because it's on the left side. So as you can see, USD is actually very bullish. What did we see? Now, here's what people actually get it wrong. You current traders, the reason why you sometimes lose most of the times is because if you see something like this and then you take your Fibonacci retracement and then you put on the this one, which is correct. No, let's just do like that. Yeah, which is you guys. What you do is simply do like this, right? This is correct. This is correct. This is how you use. This is how you use. This is how actually you use Fibonacci retracement. This is a selling zone, and then this is a buy zone, right? Now let me show you the mistake that you do. Let's go to there. This is a sweet spot. All this is a sweet spot to sell, all right? And then all this is a sweet spot to sell, and then all this is a sweet spot to buy, right? Now the mistake that you guys do, right, is that you don't use DXY. DXY is very important to confirm that are you buying or are you selling. Let's go back to DXY again. As you can see, DXY is saying I'm buying. It's saying US dollar is buying against all pairs. That's why there's this whole gap, right? So the market will always, as you can see, it actually rejected this level with our strategy. As you can see, double bottom, bridge, retest, buy, and then the market is very impulsively. It's gonna go there and fill up this gap very quickly, and then hopefully take out these relative equal highs, right? And then it goes to that spot. Now let's go back to USD JPY. Now on USD JPY, most of you, that's where you lose it. Okay, most of you say, this is a selling what? This is a selling zone. You do something like this. You put your stop loss right about there. Let's just do like this. Okay. You put your this is how many people trade, because you don't look at what relative strength index of USD is doing. You do like this, right? Let me just do something. You do like this, guys. These secrets that I'm showing right now, these are the secrets that your mentors don't tell you, because these secrets that I'm revealing right now, these are paid secrets, guys. These are paid secrets. Most of you don't know these things because your mentors, I don't know what kind of people are they, because they don't just, they make you pay for information that I'm actually giving for free. You see, they don't even tell you all these, your mentors. Then there you will see your strategy there on a smaller time frame, maybe on H4. Maybe on H4 you see something like this. Let me show you what you guys usually do. The reason why many people lose, right? They will see something like this, right? This is and then they say, so this is what they see, right? So this is what they see, and then on a smaller time frame, right, you see this thing and then you sell, right? Now, but what did Dixie say? Dixie said it's buying, right? And then you lose, and then this thing goes all the way up, touch some, and then this thing does something like this, and then you lose. And then you'll be shocked. How did I lose? Well, at least I'm on the very sweet spot to be selling. Now, the reason why you lost, right, is because you didn't check DEX. DEX is saying USD is buying. You can see this high. This high would be taken out very quickly. This high will be taken out very quickly to go all the way up. So now we are now convinced that this pair is very bullish, right? This pair is very bullish. So USD is gonna go all the way and then fill up these small gaps. So if you are somebody else, look for any entry points to be buying, right? To be buying USD. Let's just do like this. If you are somebody else, you are looking for on a smaller time frames, you are looking for something to do like this. For me, with uh, big equity, this is a good thing to do on just USD. Why? I don't just buy before I confirm. I'm always confirmed. I'm always confirmed. I'm always confirmed. These are the things that I didn't tell you about on my series. This is another. This is a what called rising tips, right? These are rising tips, right? As you can see, the market is rising. It's what called relative rising tips. The market is rising like that, as you can see. So even if it goes down, right? This is the reason why I put a room there, is that if the market does something like this, okay, and then it can always, go up all the way, right? Because I know there's what we call Asian session, London session, New York session. So you see, so the market will just go there. Just to give you the benefit of doubt, if you are to buy right now, just need to put your stop loss just below that's the sweet spot, right? But if you are to wait for the smaller time frame, let's go to H4 and let's go and see what's going on H4. So now for the H4 guys, right? For the H4 guys, this is where we sniper, or even for the M15 and M30, we sniper, right? As you can see, this level has been breached, right? This level has been breached. Now this is how I sniper. I wait for the pullback, right? If the market comes there for the pullback, and then what I do, and then I buy right about the, okay, so let me just do something like this. So for those who are waiting for the pullback, this is what you're supposed to do. Supposed to do something like this, and then so your risk would be less, right? Your risk would be less. Simple as that, guys. Your risk will be less. So just for the benefit of doubt, just put your TP right about there. Alright, so this is a good spot. Just so the market will just come and then touch there, and then you are safe, right? But for some of us, I can hold this much, right? I can hold this much. I can hold this much. Now the reason why I use these bigger stop losses for this whole big move is that the market sometimes does this. Really here, if it comes back there and then test this level, it will spike up all the way like this, right? Now, but before it breaks this level, what it will do, it will come for the final, what we call final stop hunt. This one will go all the way down, checking out these guys, you guys. So be satisfied when you catch those 1:5, 1:6, 7, right? Even sometimes, now this is because this is a currency, so I cannot convince you to put your stop loss like this. If I'm using synthetics, which is derivative broker, I can do this because on synthetics I know how to catch sniper entries. But now the problem with the currencies, sometimes there's news, sometimes there's instability in the market, so there are these wicks, too much wicks in the currencies. They can just put the wicks there, and then they can just go up all the way. So other thing is, always use reputable brokers, because sometimes the brokers can give you a bigger wick just to take you out, and on other brokers they won't have that wick, so you can just put the fake out on your account and then they run away with the money. But always use the reputable brokers. So you can just check the link in the description below. I think I've put the brokers that I use that are always safe. Alright, so this is what the market will do, will spike all the way up. Okay, and then if it fills this level, I mean, if you had risked something like what, $10, you would have gained $57, right? This is enough, guys. If you risk $100, you get $500 on this risk to reward ratio. So be satisfied, take out your money. If the market comes down like this, then you buy, and then you enter with me, and then you put your stop loss just above this, just below this key zone, right, of the daily. And then your stop loss will be there, trying to catch. So your entry point will be somewhere there if the market comes down, and then you buy, and then you hold again, right, with some of us. So this is for the intraday traders, and then this overview that I always do is for swing traders, right? So us swing traders are those people who've got a lot of things to do in our daily basis, man. We can't be sitting on the charts, stuff like that. We also have like families to attend to, and other things to do. But just to be free, you know what I'm saying? Like, you gotta be free, bro. You gotta be free doing other things, driving and stuff, going and seeing other people. Or let's you just leave the market, just do whatever it does, right? So let's go and check what's going on. Let's check USD CAD should be buying as well. USD CAD should be buying, right? This is my strategy. You look for double bottom or any reversal patterns that were mentioned in our series. Just go and check it up. You see, this is our strategy. You wait for double bottom. Okay, double bottom, as you can see, double bottom. You wait for bridge. There are 2 entries. I'll emphasize again. Let's put there are 2 entries. There are 2 entries because sometimes the market doesn't come for the pullback, right? So there are 2 entries, right? As soon as the market breach this zone with the bullish impulsive move, you buy, okay, and then you put your stop loss just below this key zone. But if you are patient enough, this is for the impatient, right? Impatient doesn't mean it's bad, but it just means impatient. Okay, don't confuse the two. Then the second thing that you can do, you can wait for. Let me just zoom it in for better quality, right? Now this is it, guys. Now the market comes down, goes there, comes down, then breach, and then you wait for the retest, right? So when the market retests, and then you buy there. So you also need to look it up for the candles that puts the wicks, right? And then if you see that the candles are now putting, even one candle is enough to just, if you just push the wick, or if the candle doesn't close below this zone, just to do something like this, right? And then put some wicks, and then you can just, you are already convinced that the market will buy, right? So you buy, put your stop loss below this key zone, and then you go up all the way. So let's go and see what is happening on USD. So as I said, USD is buying, right? So I like to start from bigger time frame. So let's just go to daily. Let's just go to daily and see what is happening on daily. As you can see, guys, the market is very bullish, right? This is what the market has been doing. The market has been bullish, right? So the market is ranging in this key zone, right? So what I was also seeing, I'm seeing this key resistance level. As you can see, the market came up all the way, tries to breach there, failed, and then it breached finally. And then it has now rejected this zone with our strategy. What am I anticipating? I'm anticipating that the market will let me just do something like this. You see, I'm anticipating that the market will do this. I just marked up everything. See, market will come down, go there, go down, and then you see someone selling USD. I don't know why people don't do this. Currency traders, guys, be serious, guys. Be serious. Use Dixie. Always start by using Dixie, and then you deduce what is going on Dixie, and then you come to these currencies. This is easy, guys. Come on, guys. I don't know why you currency traders don't know this. You see, this is what we do. Simple as that, right? For those that are impatient, guys, there is our strategy again that I wrote on my book. You can even check the link in the description below if you want to read the secrets of how to catch these type of moves. This is a strategy that I wrote there of drawing something like this. Okay, this is a breach, this is a retest. So what am I waiting for? I'm waiting for the money candle or the buying candle, right? The third candle, see, this is a breach candle, this is a retest candle. The third candle is a buy candle. Now this is not on the series, this is on my textbook, right? The third candle which comes in, you buy, right? And then you hold up until it takes out. Let me show you. It takes out